Good morning, everyone. It's 8:01 a.m. Chicago time on Tuesday, the 5th of April, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, the overnight sentiment is a risk averse. Market is moving to a safety, with gold leading the pack up $15 at 1234.5. It's trading at $1,234.50, up 1.24%. Next to follow in the universe of futures that I watch is the U.S. Treasury bond, up 0.82%, and then the yen up 0.58%. So clearly the market is moving towards safer assets. We're seeing the DAX take the biggest hit here, down 219 points, down 2.24, followed by the Euro stocks down 2.15, and then the S&P and the Russell 0.8% at 0.9%. So crude oil is also down at 35.46. I spoke about crude oil yesterday. I mentioned that break below 36.15 will likely lead us down to 35.50, and it looks like we're trading 35.47 right now. Not saying I'm always right, but there is a pattern to the way the market does things, and that's really the pattern we seek to exploit here through these trader bites and in our trades every day. Let's have a look at what's on deck for today. So what's left, we had trade balance came in a little bit wider than expected. We're getting a U.S. services PMI final at 9:45 Eastern, 8:45 Central, expecting 51.2. Then at 9 Central, we're looking for ISM non-manufacturing 54.1, and JOLTS job openings. This one has been a mover the last couple of times at 5.490 million. At the same time, these are all at 9 o'clock Central, 10 Eastern. IBD tip economic optimism expecting 47.5. That's a low tier number. And as far as Fed speakers, we had some overnight speaking in Asia, but U.S. Fed speakers in Asia, that is. We have ECB Speaker Costa speaking to Parliament at 9 o'clock Central as well. Other than that, we're clear on our calendar for today. We still have a few things to contend with for the rest of the week. Let's take a look at what we did yesterday. So, as always, a quick review of yesterday's Trader Bite and what was expected. Again, you are at liberty to watch these. Just subscribe to my YouTube channel to be notified of when these come out, and you'll be able to see what was expected versus what happened and why. The primary hypothesis yesterday, let me switch to white here for the whiteboard so as not to confuse you. The primary hypothesis is a most likely test of the overnight high, and the reason for that was the overnight high was weak. That was left while right before the open, while we're doing a trader bite, we could see that the overnight high was fairly weak, and so the expectation is the market will likely continue and complete this weak high from the trend day Friday, and will likely continue higher tests. But overall, the primary hypothesis is back to the 2057 point of control made over the last 3 days. That was the key test of the day. Beyond that, then we're looking for 49 and a quarter. I didn't cover that, but the next LVN zone. So we have an LVN from Friday. We have the next LVN from Friday. And that is also the value low of the MC. So we're looking for a test of the MC point of control, the microcomposite point of control at 57, continuation down to 49 and a quarter if it's likely to continue down. But the overall expectation is for lower. That's hypo 1. Hypo 2 was for a drop early down to that 57 again, chop and a bounce, and then ultimately taking out the prior day's high and the overnight high. That was hypo 2. Hypo 3 was chop on the open to fall in and then stay in range for a rest day after a large ranging trend day on Friday. What actually happened is a combination, mainly hypo one. However, we did not take out that high, the prior day's high. The expectation again was we were a little bit higher when the trader bite was taking place. The expectation is for us to go higher, chop, and then drop to 57. However, we got the 57 to the tick right there. You could see the drop to 57 highlighted here, the MC VPOC. These are, by the way, if you have IRT, if you're using Linsoft's IRT, if not, you can check it out at linsoft.com/FT71, and you will be able to see that there are these things called flex levels. These are levels that I and others who are helping me put them together for various products. I do the ES, and others do various products, NQ, the notes, the Bund. And crude oil, these levels you can just bring into your chart and they're updated dynamically. If we update them throughout the day, these levels come in as a package. They're not anything you have to pay for. They're just there for you to use as a reference point. They're updated on a weekly basis right now. But you could see here the MCV was the key price, tagged to the tick. The market goes all the way back to the open. A very odd rally here. I mean, it's an expected rally off of the MC on a virgin test here, but it ends up pushing to the open and then rotating all the way down to 54.75. And then the key element that it left behind yesterday was this terribly weak low, three 15-minute bottoms, 3 15-minute bottoms at the low. The expectation on such a low is continuation lower on Globex. The expectation is that the market is likely to take that out into Globex. And what it has done is it has pushed all the way down to 37.75. One thing I want to point out to you about this area. This is a weekly low volume node here from last week. We bounced off of it the first time. We're likely to push through it this time. Again, it's a weekly low volume node. The next key area to test below is this 2016 area. 2016. Let me turn on labels for this. 2019, sorry, the 2019 area. The 2019 area is the weekly low. We've been one time framing up on a weekly. Taking out the 2019 ends the one time framing up. Look up one time framing, market profile one time framing on Google to understand what that is. But it ends a one time framing up, and that essentially means that the trend up is coming to an end for the time being. That would put in a lower low. So this area here, 2019 and a quarter, is key. I'm going to be talking about it throughout the rest of the week. So that's the area to watch. Again, the 35 is a low volume node. We stopped just a tick ahead of it on Friday before the rally on the non-farm payrolls, and we are approaching that level right now. So a lot to contend with. I expect that there would be some pretty good opportunity for short-term traders today. The overall overnight session stance has been of long liquidation. We have a B-shaped profile here. The market has moved down far enough to have found its buyers. It is temporarily holding steady for its buyers. However, we have this impulsive move down, a pullback, could not even get to the mid, and it's lingering here. The expectation on the open is we breach this 2037.75 and make a test of 35 and a quarter. That's a key test that we're likely to do this morning. And remember, if this region that we rallied through on Friday was strong, was excess, in other words, it was too cheap, then the market is not likely to go up and turn all the way around back to it. This shows weakness, and in doing that, we were likely to realize that the volume that took place going up is likely to drive us down, and that's why the expectation for 35 and a quarter to be taken out today. We'll see what the struggle will look like. But I expect that with prices being down where they are now, with the gap open, that we're likely to see an attempt at responsive buying uh, because the trend continues to be up. The intermediate term trend continues to be up. You have to keep that in mind. But I'm looking for this 37.75 to be taken and for 35 and a quarter to be tested at some point today. So the primary hypothesis for today. Before we do that, let's take a look at the holistic picture, the bigger picture. We, again, like I discussed yesterday, we breached above the 2015-75 to move into this next high volume zone. And we have come to the pinnacle of that zone. We are right at the peak of the this 2057 represents the peak of volume, and we have pulled back, and the expectation is we're likely to test this this week. We're likely to test the 2057 from below before the real continuation down. Temporarily, we're likely to continue down, but look for a push up into the week here for the next major rotation down if we have one. And then that puts our 2015, 75, and 2019 in play, and those are going to be the key areas coming into the rest of the week here. A lot to digest, I know, but there is a lot going on up here, and we are moving away from the high volume node for the first time. We've tested, we've pushed, we've tested through it, held, and we are dropping off. That is very natural. That is a very common and a very natural way that the auction proceeds into a high volume node. So today's drop is not a surprise following yesterday's action. Okay, so coming into today, the primary hypothesis is to look responsive. The probability of a gap close today is fairly small. It's in the 20% range. With the expectation is for it to attempt to be responsive because we do have a gap down imbalance. Remember, we're inside of an MC here, and then we're looking for this to find sellers and for it to push lower and take out this 35 and a quarter. That is the primary hypothesis. The secondary hypothesis for today is to try to chop around on the open auction out of range, test lower, take out the overnight low, chop around, potentially take out this 35 and a quarter, then come back in and then basically hang out in this area. That is the secondary hypothesis for today. So what is our job when we talk about these? What is our job as we watch the market open? Our job is now to see who is in control. This, if I had a hammer that I can pound something into your head with, it is that your job as a trader is to consistently identify who is likely in control, not only buyers or sellers, but which time frame is in control. Is it short-term traders and they leave certain tracks? Open auctions are clear signs that short-term traders are in control for the moment. Which levels are respected? Is the market respecting day-type levels? In other words, yesterday's high, low, close, open, value areas, that sort of thing. That tells you that short-term traders are likely to be in control. Or is it running through major levels like weeklies, composite levels, micro-composite levels, and so on? That tells you long-term traders are in control. And those are the traders you generally don't want to fade. So if you got long yesterday, you're battling with intermediate term traders, and that's just a tough battle to win. It's like holding back a flood of people. It's not the way to trade. So if you're looking for what to do, just wait on the open, watch which side takes control, watch which side has the better rotations and the better pushes. So you don't need to trade the open, let the market set up for the first 10, 15 minutes, and then look for which hypothesis is likely to play out given what it has done so far, and then line yourself up with that hypothesis. That is my approach to how I trade. Anyway, I'll leave you with that. I'm doing a talk with Bookmap this morning or this afternoon at 12 Central, 1 Eastern. We'll go over execution, what I'm doing for execution and what that looks like. You might want to attend that. I will post the link for it on my Twitter feed. Again, if you're not on Twitter, just go to twitter.com/futurestrader71 and you'll be able to see that link on there. Good luck, and I'll catch you either today in this webinar or tomorrow morning. Take care.